Welcome back to another episode. Today we're going to take a quick look at one of my tier 1 companies that is unfortunately taking a huge hit today. It's down about 17.4% after reporting earnings this morning. So today I want to take a quick look at their earnings, share my overall thoughts and why the stock price is down so much today. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment where I have 10 free stock ideas for you. And I also have this awesome free weekly newsletter where I share all the stocks that I follow. So for those not familiar with Cerence, this is a company working in the artificial intelligence voice market, mainly in the automobile industry. I've done plenty of videos before, and it's one of my tier 1 companies. We can see right now, though, it has not been performing that well. Today, down about 17.5%. And we can see from its 52-week high, the stock is down about 35.48. But is it on sale right now? Let's take a quick look at their earnings. Quarter 4 revenue was about $98.1 million. And this is a company with about less than $4 billion market cap. I believe with today's drop is probably closer to like 3.8 or so. Yep, market cap of $3.26 billion right now. So it's a very, very small company. Quarter 4 revenue was $98.1 million, and this was up 7.15% year over year. And for the full year of 2021, total revenue was $387 million, and that was up 17% year over year. And what is very attractive or impressive about this, which is why I enjoy Cerence, is a lot of their revenue does come from the automobile industry. We've seen huge shortage demand, and even though sales in newer cars have been kind of flat, we're still seeing growth in quarter 4 revenue and in full year revenue. But I want to say the main reason for this company taking a huge drop was they did give weak guidance, both for quarter 1 outlook. They gave about a revenue of about $93.5 million at midpoint, and that would represent a flat year over year growth. But IHS auto forecast production for 21 is expected to be 21% less than same time last year. So even though they're keeping the revenue flat, but automobile production is expected to be 21% less, I think that's pretty impressive in my mind. They also gave full year outlook for 2022 to be about $412 million at midpoint. That's about 7% year over year growth. And IHS auto production forecast expects automobile industries to produce about flat growth, about no growth compared to this year. So that to me is super impressive, that there's expected to be a decrease or flatness in automobile production, but this company is still expected to grow in revenue. Unfortunately, these guidance did not meet analyst expectations, and that's why I believe is one of the major reasons stock price is down. Both quarter 1 and both full year outlook were down. Main reason stock price is down. To me, that is not a reason for me to get out of this stock. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank the Motley for sponsoring this video. Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. So let's take a quick look at some highlights. They did mention they have strong bookings for the full year of 2021. They had a strong booking year of $590 million. $120 million out of that $590 million were from their new products. They're entering to new products we're going to take a quick look at. But now they have a backlog of $2 billion, which I think is pretty impressive. And here we can also see some highlights of quarter 4 revenue. Year over year growth about 7.5. Non-GAAP gross margins were 78.1%. Adjusted EBITDA margins were about 39.6%. And they are positive in cash flow from operations. So overall, company fundamentally is in a great place. Next, like I mentioned, right, we can see here these guidance for quarter 1 fiscal year and for the full year. Nothing to see there. And like I mentioned, backlog now up to approximately $2 billion. And that gives them a nice visibility of upcoming revenue and kind of stability for the market. But now if we take a look, at some other highlights, in this quarter, they won the two-wheeler customers, like I mentioned, First, they're mainly in the automobile industry. They finally got some key players in the two-wheeler industry. So they're kind of bringing artificial intelligence voice conversational to the kind of bike market, which can be a huge potential. The other thing, they actually won their first building mobility market. So this is a whole new market that they're entering, and they're kind of adding their technology into elevators. And they won in one of the biggest elevators manufacturers in the world, which I think is very, very impressive. Finally, they also mentioned during their earnings call that they won their first customer in the new market. This new customer, they kind of gave them the awarded letter, which is kind of a pre-contract, so they haven't disclosed those numbers yet or anything. They're still waiting to kind of do a little bit more studies in this market. But this is showing that, hey, this is, I've done a little videos on artificial intelligence voice. I talked about it with NVIDIA, I think on Friday, and one of the three companies that I believe will benefit from this market. I'm wondering where this new market is coming from. I want to get more information from there. But this to me is bullish, right? They're winning in the two-wheeler. They're winning in outside markets like the mobility elevators. And now they're winning in a new market that has not been disclosed. Again, this to me does not seem reasonable to see a company drop about 17-18%. Next, they also mentioned they are seeing improvements in metrics. One perfect example is cash flow from operations. In 2020, it was around 38% of revenue. Now it's about 48%. And for 2022, they expect for the next year, they expect about 51% cash flow from operating margin. So metrics are improving. Company is growing. And again, right now, the biggest hurdle is semiconductor issues. And that's something affecting the overall business. I wouldn't say it's Cerence's fault. Some other things to note, they did mention that the semiconductor shortage is really impacting the business. This is kind of affecting things like slowdown in monthly active users. We can see slowdown in monthly active users for the past few quarters. Remember, there wasn't much growth in the automobile industry this quarter, so it's understandable for us to kind of see this monthly active users kind of flat line. But also something to keep in mind of. They also, like I mentioned, that kind of semiconductor shortage is affecting full year guidance for the upcoming year and for the upcoming quarter. One of their biggest metrics, or one of the biggest providers of vehicles revenue, is this variable segment. So they have a variable segment, and the variable segment is the one that's truly impacted by the change in automobile production. That is the one that they believe is going to continue to be volatile with the semiconductor shortage. They also do expect fixed revenue to be down 2022 versus 2021. And the reason is 2021, they did get some strong new customers with fixed contracts. They don't expect to see that type of movement again in 2022. But it's still possible, especially with all those new markets coming in. So overall, I don't think this company deserves, in my opinion, this 18% drop on the day. I think at one point it was down over 20%. Right now it's down 17.56. So for me, Cerence continues to be a tier 1 company. At these prices, I believe this is high dollar cost averaging position, a time when I personally would really start to add in. And this is probably going to be one of the stocks I add on Friday. Like I mentioned, I do own Cerence, and this is was updated today, November 22nd out of 2021. So take care, have a good day, and see you next time.